Good evening, traders. Mark here from the Day Trading Room. It's approaching, well, it is actually 8 in the evening London time on the 20th of December. Just a few days to go before Christmas, so I wish you all a happy Christmas. So, at the end of this video, and looking forward to another good year of trading next year. Scary to think it will be my 11th year in March. Well, technically my 12th year. Will be 11 full years. I'm in 11th year now, so 12 years in my 12th year in March of next year. But yeah, it's been a great journey, and the best job in the world if you can make it work. But anyway, I just wanted to talk briefly. This is going to be. I'm trying to make this a short video. I know I always say that and end up waffling on, but a short video. I've been trading lightly for the past week, and this week it's really been a one good trade mentality. Look at the open. Is there a good trade there? Yes, take it. Whatever happens, happens. If I don't see anything, maybe I'll hang around for an hour or so and just see if we get a retracement back, a little counter trend play perhaps, or just something from one of my setups. And really, one trade. Some days I haven't traded at all. Some days I haven't even touched the market. The reason for that is at the end of the year, I like to. I don't want to get too heavily involved in things at the end of the year. It's been a good year. It's been a good month, and the last thing I want to do is change that feeling from a trader's point of perspective into one of disappointment or of doing something or taking a max day stop or whatever it may be, or making a mistake. We all make mistakes. I don't want to be doing that. I don't want to be getting caught up in anything. I want to wind down a bit, enjoy the last few days of the year, and the entry into the journal, the entry into the comments will be good year, and just wound down nicely at the end of the year, and ready to get back stuck in January. So I haven't really done much trading, if I'm honest. I've taken a few trades today. We're up 327 at the moment on the day. Really strong day. It's one of those days I talk about quite often. Overnight just basically tells you everything you need to know. I won't bring it up, but literally from the close of last night, consolidated till about the European Open, 8 o'clock London time, and then we just pushed on and on and on and on and on, and we opened at highs. We didn't pull back much. We opened pretty much above the prior day's high. We held, we drove up. It's one of the three possible setups that I talk about on big gap days, and this was one of them. The push up, the consolidation, the ticks are strong. Again, these are really good clues. It's just hold. I mean, look how high they are. Oops, I'm moving that around. Look how high they are. They're in the 500 or 600s and holding there. Now, I'm not talking about 500 or 600 just on spikes. We're talking holding there. Now that translates, if you think about what the ticks are and what that's actually doing, that is institutional buying hitting those offers on the stocks. Bang, 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 bang. No one is hitting the bids, or the net, should I say, of people hitting offers to people hitting bids is far weighted to the buy side. So you've got to translate that to what's actually happening, and then translate it to the price action, and then looking for a trade from that. So of course I'm buying that little consolidation. I prefer to have a pullback, but let me just zoom in on that. But if the moving average catches up to it, not the moving average, sorry, if the VWAP catches up to it, then that suits me fine. It's actually a stronger. It's actually a stronger trade if we're only getting a couple of minutes of consolidation with really high ticks, the rising VWAP. We're taking out overnight highs already, and we've got good targets in sight. We've got 12k cash in sight. We're actually at 12,100 now. We've got 12k cash in sight. We've still got an explosion in ticks to come. It's great. So I'm taking that trade every time I see it, whether it's downside or upside. So I'm long there and I'm waiting, and then of course, boom, got the explosion and just scaling out. Now, unfortunately or fortunately, whichever way you want to look at it, my plan is always on these sort of trades to come all out, or the majority out, at the high tick reading, at the new high tick reading, especially if it's over 1,000, especially if we're in the first sort of 15, 20 minutes, 30 minutes of trade. I like to take it out and reassess, because often you'll get that extreme buying at the open without short stops or whatever it may be, orders at open coming through. Often you will get that, and you get that crescendo of buying, and then it dies out. So yeah, that was me. buying there, scaling hours have come up, and there was the high tick. Actually, I think it's 1200 ticks. Oh no, it's 1082, just a little bit less than I thought. So I'm all out of that candle, which is a little bit disappointing. I would have, in a perfect world, it would have just given me 800 ticks, tickled back a little bit, price just held again, and then gone again, and I would have taken the last off at 12,000 cash, which was that spike there, which was my ultimate target for it. But then, if the ticks are giving me a sign to get out, then I have to get out. So that would have been my ultimate target, but I was ended up being all out there. But still, nevertheless, a nice trade for a Tuesday. So that's really much the only trade I want to cover. What I wanted to point out is how I think we'll spot another one that jumps out at me. If I can't see, I haven't got my blotter with me. I'm in the home office now. So I won't talk about it if I can't see one that I remember taking. But anyway, that was today's trade, and that was a nice little trade. What I do want to point out very quickly is the VWAP, volume weighted average price. If you're unfamiliar with that, have a look on Google. And I really like it. I really like it because it's not a fancy indicator. It's something I know institutions use. I know traders working at banks use. I know that it's actually the benchmark that a lot of traders are pitched against. So if they're given a large order, the fill they get for that client, that large client, the institution, the bank, whatever, if it's a large buy order, it's how close to the VWAP they've got, which is basically a sort of average price. It's weighted with volume. That's why it's called the volume weighted average price. It's like an average price based on volume and actual price, which is obtainable and which a lot of traders use as a benchmark. So a lot of people are looking at it. A lot of algorithms kicking around there. If people are buying, let's say they're buying regularly throughout the day, their algorithm may say, try and get more aggressive with my buying underneath the VWAP. Okay, because that means they're beating at the happy. Same with the selling. So that's really why I look at the VWAP. A lot of other people are looking at it. I know a lot of algorithms have it programmed in. I know a lot of traders are using it as a benchmark. So I just wanted to point out really last week how key and how useful it is, especially retracements to it. Now I don't know what day we are here, 13th. So I mean, look at the example here. It's okay in the first sort of hour or so. I prefer it when it's had a large excursion away from the VWAP and then comes back in a low volume midday lunchtime period, just to probe it. And so yeah, that's valid enough there, fine. But I prefer this one here, which is why I've circled it. You've come a long way from the VWAP. Let's get the drawing pen out here. You've come a long way from the VWAP, and now you've pulled back, and we actually tagged it. I think there is to the actual tick. There's the VWAP, there's the tag, and then we rolled over from there. Yes, we did push back up, but there's more than enough meat in that to take a nice trade out of it for a day trader slash scalper. And again, the next day pushed excursioned away. Even actually we tagged it there, but it's a little bit early for my liking. But however you want to use it, that's up to you, entirely up to you. You can make your own trading judgment around it, or even use it to sort of confirm a pre-existing setup, whatever. So here we go again in the sort of 2-hour lunchtime window, push back up. Yeah, if you hit it there, you would have taken a little bit of heat, but we're not talking a lot. What was the VWAP there? VWAP there was 23. So if you took it there on that high tick reading, which you probably would, let's say you didn't get a great feeling, got 23, you would have only had to sit through 8 ticks worth of heat. So you wouldn't have a stop that tight generally, and a nibble there. Perhaps you'd have had a scale, maybe you wouldn't have taken it, but anyway, you can see the point that it's still a level that a lot of people are looking at, and today we haven't even got anywhere near it. After that initial push up, this was funny. This spike down, it only happened on the YM, didn't happen on the ES. So it's a funny old spike that. So yeah, we haven't even tagged it. Just shows the strength of the day really. We've got an hour and 10 minutes to go, so we'll see what happens. But yeah, just wanted to point out the VWAP. Useful tool, that ticks and VWAP. Those are the two things on my chart at the moment, and obviously the overnight high on another chart, overnight low, yesterday's high, yesterday's low, close, and today's open. I talked, I think, a couple of weeks ago about how valid the open was, and people often email me and say, hey, you talked about this being valid, What's changed? Well, it's all about Well, for me, it's all about adapting to market conditions and seeing what is actually working. The same thing very rarely will work all the time. In August we had the continuation trade setups. This worked time and time and time, and they were great, and you could just rely on those to work for you. And they were great money makers. And then went into the little period of stagnation, and then we were looking at double tops, double bottoms, flushes, exhaustions, tick highs and lows around extremes. They were working nicely. Had to adapt the situation to suit. And now we've got a little bit more volatility that's coming to the end of the year, and we're getting the sort of pushes away from the VWAP coming back, and you see the VWAP's working. I still like the opening drive trade. It's not as prevalent as it used to be, but when it's there, like today, I take it. I'm all over it. I enjoy that setup. It's one of my favourite setups. And then, as I say, VWAP, well worth looking at, and still got the key levels up. Market is paying attention to a lot of the key levels. So we'll see what the rest of the week brings this week, and we'll see what happens in January. Expecting a slow start to January, but you never know. It's a lot of very news driven, the market. If something comes out which is considered bullish or bearish, then I'm sure the market will react to suit. So, as I say, happy Christmas. Enjoy yourselves, relax, and whatever happened last year, draw a line under it, adjust your trading plan for the new year if necessary. Get your risk management in place. That's the most important thing. Just understanding how much you're going to risk per day, per trade, per week, whatever. The setups you're going to take, the markets you're going to trade, and just stick to it. You're going to make mistakes. If you make mistakes, you don't have to keep making them. It's fine. Move on to the next thing. And that's it really. Just little things that I know have worked for me, and hopefully next year will be a great trading year for all of us. So take care, guys. Enjoy Christmas, and I probably won't be back with another video now. I'm winding down, so I won't be back with another video until the new year. Goodbye.